Monday, May 26th, 2025. And welcome back, everyone, to the 46th edition of Finwell Daily Brief.
Great to be here.
Let's jump right in, shall we? Starting with our financial fact of the day. And this one really gives you something to think about regarding how India saves.
It really does. Get this. A huge 2/3 of Indian household wealth is still tied up in physical assets. We're talking property, gold.
Wow, 2/3 even now.
Even now. Despite, the explosion in financial products and mutual funds and everything else, it really highlights this deep-rooted preference for tangible savings, something you can actually touch.
It's fascinating, isn't it? That sense of security in the physical. Okay, let's move to the markets. How did things shape up at the close today, 3:30 p.m. IST?
Well, overall positive. The Nifty 50 closed at 24,996.90. That's up by 158%. So edging ever closer to that 25,000 mark.
Right. And was that strength broad-based? What about the mid and small cap?
Yeah, pretty much across the board. The Nifty Mid-Cap 150 finished at 20,989.95, up 0.55%. And the Nifty Small Cap 250 also saw decent gains, closing at 16,619.10, which is up 0.52%.
So the whole market felt it then, the total market index.
Exactly. The Nifty Total Market Index reflects that it closed at 12,888.4, up 0.56%. So yeah, a generally positive sentiment today.
Good to see. And anything happening on the bond yield front? I heard some movement there.
Oh, definitely. India's 10-year government bond yield actually fell again. It's down to 6.26%.
6.26? That sounds low.
It is. It's the lowest we've seen in, believe it or not, over 3 years.
3 years? What's driving that?
Well, it seems to be a mix of things. The RBI's rate cuts are certainly playing a role, improving liquidity, and inflation has been relatively tame, so that combination is pushing yields down.
Interesting. And the rupee, how's it doing against the dollar?
Getting stronger, actually. It's at 85.11 now.
Okay.
Part of that is, well, a bit of general dollar weakness globally, but it also points to renewed FII interest. Foreign investors seem more keen on Indian bonds and equities again.
Right, which ties into the positive market sentiment we just talked about. Okay, so a good macro backdrop setting the stage. What were the big headlines driving the financial world today?
Well, the biggest one, arguably, is pretty monumental. India has officially become the world's fourth largest economy.
Fourth, overtaking Japan.
Overtaking Japan.
Yeah.
The projection for FY 2025-26 is a GDP of $4.19 trillion. It's a really significant milestone. Speaks volumes about India's growth trajectory and, its increasing clout on the global stage.
Absolutely huge news. And did the market react to this? We saw the positive closes.
Oh, definitely. The rally today was quite strong, and you could see specific sectors really leading the charge. Auto, IT, and metals were particularly buoyant.
Any specific stocks standing out?
Yeah, names like M&M, Tata Motors, and Auto did well, HCL Tech and IT, and JSW Steel and Metals had a particularly strong day.
Okay. But you often see some divergence, right? Did everything go up?
Not quite. Interestingly, some of the financials kind of lagged behind today's rally.
Any thoughts on why? Profit booking, maybe? Sector rotation?
Could be a bit of that. Perhaps investors are shifting focus to sectors they see having stronger near-term potential, or maybe some specific concerns lingering around financials. This is something to watch.
Definitely. You mentioned JSW Steel had a strong day. Was there a specific catalyst there?
Yes, there was. It surged nearly 3%. This followed a Supreme Court verdict today related to the Bhushan Steel case. The court basically maintained the status quo.
Removing some uncertainty then.
Exactly. That legal clarity seems to have given the stock a real boost. Shows how non-market factors can play a big role.
True. And the IPO market, still busy.
Very much so. We had mainboard IPOs opening today, Aegis Vopak Terminals, and Schloss Bangalore. Plus, the SMB segment is buzzing. Unified Data Tech Solutions, for instance, saw strong interest. It just shows there's still a healthy appetite for new offerings.
And that appetite extends beyond the big names, right? You mentioned the mid-cap and small-cap indices earlier.
Absolutely. The Nifty Mid-Cap 150 and Small-Cap 250 continuing their uptrend is significant. It tells you investors are looking broadly, seeking opportunities beyond just the Nifty 50 stocks. It suggests sustained confidence in the wider market.
Okay, so summing up the day, positive market close, India hitting #4 globally, key sectors like auto and IT firing, active IPOs. Now let's zoom out. What's the overall market outlook? Where do we go from here?
Well, the underlying momentum still feels pretty solid. Like we said, Nifty's knocking on the door of 25,000. That plus the stable bond yields and the stronger rupee. It paints a fairly supportive macroeconomic picture.
And the ongoing earnings season, that must be helping too.
Definitely. Coupled with the robust GDP growth story, it provides a good tailwind. But, it's never all smooth sailing.
Right. What are the potential bumps in the road listeners should be mindful of?
Global factors are always the wild card. Geopolitics, shifts in what global central banks are doing, commodity price swings, these can all ripple through to our markets. So while the domestic story looks good, you need to keep an eye on the global scene.
So stay optimistic but cautious. What kind of strategy does that suggest?
I'd say a bit defensive, perhaps. Focus on quality large caps, companies with strong fundamentals. But also be selective with mid caps. Look for those with clear growth paths.
Any particular sectors looking interesting?
Infrastructure still seems promising, given the governance focus. Auto, as we saw today, has momentum. And technology remains a key long-term theme. But again, selectivity is key.
And keep monitoring the news flow, policy cues.
Crucial. Both domestic policy announcements and what the Fed or other major central banks are signaling. That will likely dictate the near-term direction. Promotional message.
Okay, quick pause here. Are you finding this daily market breakdown useful? Want to get these insights delivered fresh every single day?
Look, staying informed is absolutely critical in today's markets. Things move fast.
Exactly. So if you haven't already, take a second right now and hit that subscribe button for Finwell Daily Brief. It's the easiest way to make sure you don't miss out on the key trends, the news, the analysis you need.
It really is your daily financial intelligence briefing.
And hey, the conversation doesn't have to end here. Got questions? Want to discuss something in more detail? Find SOS Finwell on LinkedIn. Connect with us. We're there to engage and help you navigate your financial path.
So don't wait. Subscribe now. Connect on LinkedIn. It's a small step that can make a big difference.
Absolutely. Do it now. We'll be right back after this short break to wrap things up. Return from promo. And we're back for the final wrap-up of today's Finwell Daily Brief. So, recapping the big picture, Indian markets closed higher today.
Yep, fueled by good sectoral performance, especially auto, IT, and metals. And of course, that major headline, India becoming the world's fourth largest economy.
Huge news. Plus, we have those supportive macro factor stable bond yields, lowest in years actually, and a stronger rupee, all feeding into investor confidence.
Right. But as you navigate this, a couple of key takeaways for you, our listeners. First, diversification is always your friend. Don't put all your eggs in one basket.
Sound advice.
And second, be vigilant. We touched upon bear rating earlier, this tactic of aggressive short selling combined with spreading negative rumors.
Ah, yes, the scam alert. Explain that again quickly.
Sure. It's basically designed to create panic, push a stock price down artificially by triggering stop losses and fear. So if you see a sudden sharp drop in a stock you hold, especially one you know is fundamentally strong.
Don't panic sell immediately.
Exactly. Take a breath, verify the news, check credible sources before you react. Don't fall victim to manufactured fear.
Crucial advice. So diversify, be wary of manipulation like bear rating, and focus on quality investments, right? Both large and mid-cap.
Precisely. Do your homework, focus on fundamentally sound companies.
Okay, that seems like a good place to leave it for today. That brings us to the end of this 46th edition of Finwell Daily Brief. Thank you so much for joining us.
Yes, thanks everyone. We hope these insights help you make smarter financial decisions.
Remember to subscribe if you haven't already for your daily market insights. And do connect with SOS Finwell on LinkedIn. We'd love to hear from you.
And we'll leave you today with a thought from the investing legend, Warren Buffett. It feels quite relevant right now, he said. Opportunities come in frequently. When it rains gold, put out the bucket, not the thimble.
Powerful words to end on. Make sure you have your bucket ready. Thanks for tuning in. We'll catch you again tomorrow for the next Finwell Daily Brief. Until then, stay sharp and invest wisely.